Well, for anyone who thought the roller coaster ride of Chinese tech stocks was over, this past week said, buckle up. Alibaba breaking $100 a share for the first time in over a year. That's not just a ticker symbol lighting up green. That's a beacon shining on the entire Chinese economy and probably your portfolio too.
It's definitely, yeah, a sharp turnaround. We've gone from those cautious whispers about a recovery to like headlines shouting about a full-blown tech rally practically overnight.
And the CNBC article we're diving into today lays it out there. Alibaba, Tencent rally as China tech stocks rise on stimulus plans. Alibaba up 10% in a single day, Tencent hitting a 2.5-year high. It's like the entire Hang Seng tech index decided to throw a party and everyone wanted it, up a whopping 20% for the week. But what's got the music pumping? Why is everyone so eager to join this dance floor now?
That's the million-dollar question, isn't it? And like any good market mystery, there are a few layers to peel back. This isn't just a few individual stocks doing well. It's a broad market movement, a rising tide lifting all boats. To really grasp what's happening, we need to zoom out and look at the engine driving this rally, China's recent economic moves.
So is it like the government decided to just hit the accelerator after months of like cautious braking?
In a way, yes. China's central bank has been strategically injecting liquidity into the system. They're cutting the reserve requirement ratio for banks, which essentially frees up more money for lending. And they've also made some pretty significant cuts to mortgage rates.
Right. Those headlines about a potential property bubble have been hard to miss.
Exactly. And a deflating bubble can have ripple effects throughout the entire economy. When the property market slows, people postpone big purchases, consumer confidence takes a hit, and that has a ripple effect on everything from construction to tech gadgets. These new stimulus measures aim to inject some life back into the market, boost consumer confidence, and get people spending again.
So it's like giving a jump start to consumer spending, hoping that spark ignites a fire sale on smartphones and e-commerce sprees.
And it seems to be working, at least for now. The markets thrive on certainty, and seeing decisive action for the Chinese government is instilling confidence not just domestically, but internationally.
And speaking of confidence, we can't ignore the impact of big players like David Tepper, the hedge fund giant. The CNBC article mentioned he's doubled down on Alibaba and Baidu. That's not just betting on a horse, that's building a whole stable around it.
What I find particularly interesting about Tepper's move is the timing. It came after the U.S. Federal Reserve announced their own rate cut. See, when the Fed cuts rates, it becomes cheaper to borrow money globally. This often leads to investors like Tepper looking for opportunities in emerging markets with strong growth potential, like, say, a recently stimulated Chinese tech sector.
So it's less about Tepper playing favorites with China and more about recognizing a global shift where even actions by the U.S. Fed can ripple out and create opportunities in unexpected places. But here's the thing that has me wondering. Even with this incredible surge, Alibaba and these other tech giants are still nowhere near their peak back in 2021. So are we seeing a genuine rebound, or are we just witnessing a temporary sugar rush before the inevitable crash?
That's the billion-dollar question, isn't it? To answer that, we need to go beyond the hype cycle, the daily ups and downs, and delve a little deeper into the long-term factors at play. You see, while market forces are certainly in play here, we can't ignore the 800-pound panda in the room, the Chinese government and its influence on the tech sector.
Right. It's not like Silicon Valley where regulations are more like loose guidelines.
Precisely. China's tech landscape is unique. The government has a history of stepping in, sometimes quite forcefully, to steer the direction of the market. Remember what happened in 2021? The crackdown on tech companies over data privacy and antitrust concerns sent shockwaves through the market.
Vaguely. I was too busy trying to figure out if Bitcoin was going to the moon or crashing back to Earth. Remind me about the antitrust part.
Essentially, the government was concerned about companies like Alibaba becoming too dominant, stifling competition, and potentially using their market power in ways that could harm consumers. These investigations and the regulations that followed led to some pretty hefty fines and definitely spooked investors, causing those massive drops in value we were talking about earlier.
So even though things seem rosy right now, there's always that element of uncertainty. It's like dancing on a volcano, exhilarating, but you never know when it might erupt.
An apt analogy. Which brings us to another crucial piece of the puzzle, the Chinese consumer. Even with government stimulus and renewed investor interest, long-term growth hinges on whether consumers open their wallets and embrace whatever shiny new tech is coming down the pipeline.
Because at the end of the day, Alibaba and Tencent aren't just lines on a stock ticker. They're integrated into the daily lives of millions of people.
Exactly. Think about it. Online shopping, food delivery, mobile gaming. digital payments, these are all driven by consumer behavior. And right now, those spending habits are still recovering from the roller coaster of the past few years. The pandemic, the economic slowdowns, the global uncertainty. So while this recent stimulus might provide a temporary boost, the real test will be whether it translates into sustained spending growth.
So we've got government intervention on one side, consumer behavior on the other, and somewhere in the middle, these tech companies are trying to navigate this complex dance. Are there any other factors we should be keeping in mind?
It's like trying to solve a puzzle where the pieces keep changing shape right before your eyes, you know?
And let's not forget about the global backdrop against which all of this is playing out. We've got inflation worries in some parts of the world, rising interest rates in others, not to mention, the geopolitical tensions that always seem to be simmering in the background. Remember, China's tech sector isn't an island. It's part of a global ecosystem, and those external forces can have a very real impact.
Yeah.
The CNBC article did mention that David Tepper made his move after the Fed's rate cut in the U.S., so it seems like even events happening on the other side of the world can ripple out and create a buying frenzy in Chinese tech stocks.
Precisely. Global investors are always looking for the next growth opportunity, and sometimes those opportunities emerge in the wake of policy decisions made thousands of miles away. It's a complex, interconnected world we live in.
Which brings us back to our original deep dive. We wanted to understand what was fueling this surge in Chinese tech stocks, what it signals about the Chinese economy, and what it means for investors.
And I think we've uncovered some crucial insights along the way. First, this rally is significant. It suggests that the Chinese government is committed to reinvigorating its economy, and investors are taking notice.
But, and then this is a big but, it's not a guaranteed win. There's still a lot that could happen between now and a full-fledged recovery. We need to see if those stimulus measures translate into sustained consumer spending. And of course, there's always the looming question of government regulation and how that might impact these companies down the line.
The CNBC article actually highlighted some other companies that have also experienced gains this week. JD.com, Baidu, they're all part of this bigger trend, so it's definitely something to watch closely. But as with any investment, it's about so much more than just following the headlines.
So should we be rushing out to buy up Alibaba and Tencent stock while everyone else is still celebrating?
That's a question only you can answer. This recent news is exciting, there's no doubt about that.
Yeah.
It could very well signal the start of something big. But it's crucial to look beyond the hype cycle. Consider your own investment goals, your risk tolerance, and remember that the Chinese tech landscape, while potentially lucrative, is rarely ever predictable.
So do your research, stay informed, and maybe keep a close eye on those government announcements. It's a wild ride, but as any seasoned investor will tell you, that's where the real opportunities lie.
Exactly. And remember, the deeper you dive, the more fascinating the world becomes.